Hey, what's going on, guys? So right now it's kind of hard times. The markets are down and the only thing that's up is the VIX volatility index. And furthermore, we're waiting for one of the most uncertain events of the entire year, which is the US election, which is going to be the topic of today's video. So make sure you guys stick until the end of this video because I'm going to give you some investing options to consider no matter who wins, Biden or Trump, right? And if you find this video useful, go give it a like, subscribe to my channel, and hit the notification bell. And without further ado, let's just jump straight into the video. So let us first take a look at the historic data, how the elections affected the stock market in the past. And there's actually a common misconception that the Republican presidents are better for the economy and the stock market because they usually cut corporate taxes and deregulate the economy, while the Democratic presidents raise taxes and print more money, which definitely causes the inflation. So it makes sense the economy and the stock market would do better under Republican presidents, but it's actually not true. And there's actually a scientific paper titled The Presidential Puzzle, Political Cycles and the Stock Market, where the authors look at the past 70 years from 1927 to 1998, and they found that the excess returns in the stock markets have been 9% per year higher under the Democrats than Republicans, and other data supports that the economy has grown only 2.5% on average under the Republicans compared to the 3.9% under Democrats, which is indeed a puzzle because the authors don't find any cost to that. And the cause of that has actually been found in another paper titled Political Cycles and Stock Returns, where the authors extend the previous research all the way to 2015. And they found that the market premium is already 11% higher under the Democratic president. And furthermore, they found that all of the equity premium of the 3-month Treasury bills have been earned under the Democratic presidents. So in other words, if you didn't own the stock market portfolio during the time Democrats were in the office, you would have lost to the Treasury bills, and the results are actually statistically significant. And that premium, however, under Democrats hasn't been earned the following day after the election, but rather all throughout the presidential term, which if we believe markets are efficient, better stock results isn't a direct result of the Democratic leadership. So what's the explanation for it then? Well, the researchers found that the explanation for that is the timing when Democrats are elected. And if we look at the past data, Democratic presidents have been elected after major financial crises. So for example, Obama was elected after the 2008 global financial crisis. President Clinton was elected after the crisis of 1991, 1992. Jimmy Carter was elected after the 1970 recession, just like John Kennedy, who was elected after the 1960 recession, and President Roosevelt, who was elected during the Great Depression of the early 30s, for example. And that is actually supported in many papers, including the one titled Partisan Financial Cycles, where the authors find that the left-wing governments are actually more likely to get elected after major financial crises because they promise more social security to people, right? So other papers find that the Democrats are more likely to get elected when the unemployment rate is really high. So does that mean Biden is going to get elected this election? Well, leave a comment and let me know what you think. So now that we've established that a Democratic president is more likely to get elected after a recession, there's another phenomenon that happens after most major recessions, right? And that is actually the increased risk aversion of investors. And research shows that the high risk aversion actually leads to people taking on less risks. And because of that, stock markets are proven to perform better. So the bottom line is the Democrats are elected mostly when investors' risk aversion is high, which is usually after recessions, but also that same high risk aversion leads to higher stock returns. So the political leadership isn't the result of whether the stock market is going to go up or down, but rather the same factor, which is higher risk aversion, that causes Democrats to get elected, also causes higher stock premiums. So now let's take a look at where we actually stand right now. And in the past couple of weeks, we've seen a lot of volatility in the markets with major indexes plummeting. But that's not to worry because most studies have shown that the important news, which in our case is going to be who is going to win the election, don't really affect the stock market that much. And a lot of studies, however, also show that people perceive markets to be less risky and are more optimistic when their candidate is in power, which makes us think, what if people freak out if the results of the election isn't satisfactory for them? And would their behavior cause the markets to drop which is the question many people have been asking me in the past. Well, because markets are efficient and there's another big chunk of people who would support the opposite president, because we know the USA is a divided country, they already priced in all of that information so that no matter who wins, it kind of balances out to the equilibrium, and it won't cause the significant changes in the market. What we should be waiting for, however, is even more volatility in the next few weeks, because another paper titled "With Greater Uncertainty Comes Greater Volatility" shows that tight result of the election, which is what I kind of expect from this election, causes a lot of noise around the election days because of uncertain economic policies and business cycle variables. Thus, what we're seeing right now when the markets are down may actually last for a few more weeks, which is, as I personally believe, makes now a great time to buy more of the S&P 500 index fund shares. Now let us take a look at where both candidates stand in terms of their policies, right? So obviously President Trump will continue his current policies, which are really accommodative of the markets. And throughout his presidency, we've seen a bull market for pretty much 3.5 years straight. And a lot of capital was coming to the US, which made the markets grow. And in terms of sectors, he's done a lot to deregulate the energy sector. In 2017, 2018, and 2019, we've seen oil production hit record high. But because of the pandemic, most of the companies are down right now. But for the next few years, President Trump, if elected, will continue his accommodative policy of deregulating energy, which is fundamentally different from what Joe Biden proposes, right? And another sector that I believe is a good buy is a financial one, which is actually down again because of the pandemic. But Donald Trump's corporate tax cuts definitely benefited and will benefit the sector dramatically. And all those big banks will enjoy higher earnings per share, which is again fundamentally different from what Joe Biden proposes, right? So you can either look at the individual companies or indexes that track these industries, which is something I prefer, such as, you know, the S&P 500 energy or the Dow Jones US Banking Index. And I myself have looked into Chevron, ExxonMobil, Bank of America, and JP Morgan Chase, but don't take my word for it. So now, in case Mr. Biden wins, a lot of people are scared he would raise taxes and impose regulations right away. But I don't think that will be the case, considering he will inherit the economy damaged by the pandemic, where the unemployment is at all-time high 8%. And I think his priority will be getting people back to work instead of regulating companies immediately. And in terms of sectors, I would also be looking into the energy sector, but not the traditional energy, right? But renewable energy. Joe Biden considers climate change as a great threat and is a proponent of a Green New Deal, so renewable energy will be his priority. And another thing I believe Democrats lack in support is soft drug legalization. So we might expect more marijuana decriminalization coming from Biden's administration, which makes the sin marijuana stocks a potential buying opportunity. So my biggest investment recommendation to you guys would be don't try to time the market, but rather invest in the S&P 500 index fund, which has proven to be the best investment out there in the last 100 years. So thank you guys for watching this video. Make sure you give this video a thumbs up and subscribe to my channel, and I'll see you guys in the next one. Thanks for watching.